Main Street's index. And another thing, what's really interesting is, we get calls from reporters from around the world just to give a comment about the day's market performance. They ask about the Dow. And then when we follow up and see where we're quoted, it doesn't matter where in the world, it is the Dow. And you know what happens when the Dow makes a new high, that big round high. The markets stop, the balloons come out. It is the Dow. It represents America, it represents old America, and more it's representing new America as it moves more and more towards technology. Even Honeywell isn't purely industrial anymore. They want to be software industrial. So it is changing, it's evolving, and Main Street loves it.
I guess, Paul Hickey, it's really a question of history and really good branding behind the Dow here. What do these changes in particular mean, other than that technology is going to be a relatively smaller percentage of this index now, in part because Apple, which was the big Megillah in terms of its price, is going to be quartered?
Yeah, so I mean, I think the sector weightings go more in line with the S&P 500, so hopefully we'll track that index a little better. But the additions and the subtractions aren't really the big story with the way the Dow is going to look next week. It's this split of Apple, which is going to be 4-for-1, and see its weighting quartered. So just so far this year, Apple has contributed about 1,500 points to the Dow. Post-split, if the stock went to zero between next Monday and year end, the negative impact would be about 850 points. So if that happened, obviously it wouldn't happen, but Apple would still have a 2% positive weight on the index for the entire year just because of the stock split. So while stock splits are meaningless for company fundamentals, for a price-weighted index like the Dow, they mean a lot. As far as the individual companies are concerned, again, Bob was talking about it earlier, and Quincy was just mentioning it. There's not a lot of money indexed to the Dow, so it's basically just a so-called seal of approval. And, it hasn't meant a whole lot in either direction. Interestingly enough, if you go back to 1999 and look at the companies that were added and removed, 1 year later, they both saw declines on a median basis, and their consistency of positive returns was the exact same. So basically, the keepers of the index were damned if they did make the change, because the stocks tended to go down more often than they didn't.